All right, so recording this live, little spontaneous after-hour show. If you're out there and listening, good, welcome. Let me see. Actually, put it on YouTube too for now. I'm a super promoter. So yeah, we're just talking markets right now. I'm getting some work done. We just came back from the trade show, and I'm just sending out some things. Let me start the broadcast there. Watching the market, I'm getting some things done, but I decided to actually trade a little. Not trade, but actually, you know what? I might trade if we actually have a good setup here. The market seems to be selling off. We're down 375 right now. But the thing is, we're talking a lot of different things tonight, and I wanted to record it in case any pearls of wisdom comes out of my mouth. I think I already passed that point. But we're just talking about before, and this is a pearl of wisdom, so listen up here. We're talking about when you have a signal, a divergence signal, and how well that divergence signal works and how good that is. And the struggle I have between concentrating on this strictly and just shutting, just kind of just trading, being a trader like I was for so many years, or being a broadcaster, and kind of getting frustrated sometimes. We miss some setups. I missed some setups, so I'm automating everything. But you know how things work. You see the results on this, and this was a perfect example when I talk about divergences. And when I did my seminar at the Traders Expo at the Money Show this past weekend. It's posted now on YouTube and the Facebook and anything. You'll find it's definitely worth watching, because I really kind of break down this great setup called that divergence setup, and I really break it down well, and I'm so motivated to teach it. But then I realized, would a fisherman give away his location to where he catches all his fish? As an analogy I just came up with. No, I mean that's sometimes how I feel. I feel that something works so good. I'm at a point where I want to just keep it for myself, or do I share it? But I'm naturally I like educating. I like trading. I like being on the radio. These are things that I'm passionate about, so I combine them all together. I like it's just it's one of these things that I'm torn between. So, I struggle with that. I struggle with that too. So we had the bot here tell us that we had a little a setup here. It was what we call a closing or a double bottom divergence. We had a closing double bottom, a closing price divergence, where the price comes down. It could take out that low, but it closes here, and that you could draw that straight line to where the price closed above it. So even though this area is not lower than this area, it is closed at the same level, and the stochastics are higher. Z-Rex, that's what I'm thinking too. I mean, we'll talk more about that in a second. So we had this setup, and I said, yeah, this is a pretty decent setup. Let's watch it go up. So we're watching it go up. It's slowly moving up. We get up to that 20-period moving average, and I see this fast rotation. And I realize right away what we have is our second best setup. And the second best setup I like to trade is the flag setup. But the second, believe it or not, the second best setup is a higher hand, if we talk poker, than the first setup. Yet the first setup, it's weird. It's kind of the first setup works and is more prevalent in the markets, and it's such a great setup that you want to take it every time. The second setup is a flag. And it doesn't show up as much, but when it does show up, and the criteria for that is that fast rotation, the embedded 60-period stochastics, and the price closing under the 20-period moving average. So we see that, and I said, all right, this is the only setup that trumps this setup. So these are two great setups. You had a little divergence, but if you have a divergence setup, and then you have a flag setup, That is very important to pay attention to that flag setup and take that divergence, set it off. And it might give you a tick, might not give you anything. The fact is, and I think this is the pearl of wisdom that I wanted to share, is there will always be another trade coming next. There will always be another setup. So if you ever have a great setup on a divergence, but you see the embedded stochastic, you see the fast rotation, you see the price, as the price is under the 20 and we get overbought, you have to take that off, whatever you are, wherever you are. I don't care if you have a tick. You have 12.50. You have $25. Take it. Because the odds are that flag is going to play out. It's going to be a stronger continuation trend to the downside. That's where this came in. This is that flash move down. This is what we talked about. I said this might be a flag. But you also have that little closing price, and we got it called on the screen. The original gangster came out and called it. It came out and it moved up from it. But it turned into a bearish flag. And if you're able to identify that bearish flag, that's half the game. So when I was doing my presentation, I was talking about the divergence setup and how it's one of the highest probability trades. Up to close to 90% of the time, it will move in the direction of the divergence. Now imagine that 10%. That 10%. Where do you find that 10%? Well, if you see a bear flag or this what we call a triple stochastic flag setup, bear flag, that's 5% of the time that might show up. If you could identify that, you just took care of half of that 10%. You now have identified something that you need to take off that causes this pattern to fail. And if you do that, you're in such good shape now going in the future because you know the right setup to get in, you know how to get out, and if you don't see it, you're going to ride it. And then all these things add up, and you put it all together, and you develop your style around that. You really do. You develop your style around it. You got to put it on paper. You got to abide by it. You can't be a gambler in this game. All right? So certain things work over and over again. Now here's an example of another divergence back here. Now this one, we just had another one here. Let's see what happens here. Now, we have to watch this. We have to always watch a downward trend. On a possible divergence script that I writ for the Autobot, you have to be very careful with that. Because sometimes the price moves down so fast, it moves down faster than the stochastics rotate down. And you could get a false divergence signal on the bot. That's why every trade on the bot is going to alert me of a situation, and I'm going to visually approve it. I want to visually approve that trade. And what else do I have to do? So I'm not about to put this thing and run it overnight and let think I want to wake up with $2,000 in the account. No, it's not going to be that easy. If everyone will be doing it, there's traps and everything. But we know what half the traps are. Now, when you know what the traps are and you can identify the traps, God, you're really doing well. So we go back here. Here's another example, another one that the bot identified, I think. Yeah, it identified that. Original gangster again. It moved up off of this and then pulled back down. That gave you plenty of time. I mean, if you got a bad fill on this, maybe you're at 28, 28.19. It went up to 28.21. I'm talking a point. These are usually good for a point. You're trading multiple contracts. You're talking $100 a trade here. And I would get up for $100 every night. Eventually these will alert you to the overnight trades, and you'll get that alert on your text, and maybe you'll wake up and say, "Oh, this is a divergence. Maybe I'll take this." So you have that. You have what we call a classic divergence, where we have a higher low above the 20-period moving average. We have the price closing, double bottom divergence, and you have the aggressive move out of this. And another thing, you have an underlying trend line that is always broken with a divergence. So these are all these things I start to put together in our divergence trade. The other thing, we love putting this stuff together and having it all perfect. Like, so, all right, so we have a divergence in this right here and here. The odds are of this breaking out of the channel with a divergence like this is almost guaranteed. So I don't know the exact odds, but from all the time I've traded, it's up there again 90% of the time. And you're gonna move, but you know, again, the weakest link in this methodology is the trader himself, because at one point when you get a late fill, you hesitate, maybe you're chasing that here, and then maybe you should get a point, but you only get 50, or you know, a half a point, 2 ticks, 3 ticks, and you're looking for 4, and you end up holding, and it comes back, and you give it back, and then maybe you get caught here in this little flush, and you take a loss on it. Doesn't mean the setup didn't work. It did work. 90% of the time, it will work. You have to take it off. You have to be on top of your game, man. You got to be razor sharp. You have to be the Floyd Mayweather of trading. You can't mess around. Brackets? Phil Jar saying brackets. Yeah. But again, what if your bracket is giving me... I'm more to point now at this point of taking a point and knowing that I could do that every single time. Guarantee a point. Well, you're not going to say guarantee, but you're always going to be hands-on. But the odds of getting the smaller and smaller profit zone is going to be better and better. You know, and just remember, and I said this to one guy in front of the booth when I was doing some, you know, just doing some talking in front of our booth. We all are different. Personality types, we're all different. We all trade differently. We all have different thought. I don't, you know, I know what's in my head, you know, but I don't know what's in your head and how you feel or how you were brought up or how you look at life, and if you're bearish or bullish. I know people are bullish in the market and bearish, and they're looking for down. You know, I can't do that, but I could tell you, you know, I could tell you what's going to move and when it's going to move. So, you know, it's important to know that there's always going to be another trade coming. And if you could get a good directional move, doesn't mean that it always needs to be a point, but measure it out. Here we had a move. I always say, here's your divergence, here's your overbought. Once it gets overbought, you're up here, take it off. Game over. Every time it gets overbought, it probably moves back down. You're not looking for a home run every time. You know, the analogies are all there for you, you know. The greatness of people who do what they do, and the reason they're great is because they have the discipline. Baseball players have the discipline to wait for their pitch. Poker players and gamblers have the discipline to kind of fold and fold and fold until they get the hand they want to bet, and then they bet big. All right? Everything has a method, and only the great ones have the discipline to accept that and not try to, you know, reinvent the wheel or make something better than it is. That's why you have to wait. Yeah, you have to wait, right? Viljar? And what, you know, that's the important part, is teaching that. It's a mental game. It really is a mental game. So getting back to brackets, I even have a hard time putting a bracket in. I mean, unless I take a bracket, put it in a bracket for a point, and we get there real fast and takes it off, and I don't have to think about it. The thing I'm working on is multiple contracts, taking that bracket, taking that trade off and moving that stop up to break even and letting it run. You know, letting it, you know, so you guarantee a profit 90% of the time. You have your stop under the you know, divergence low is already set. The stop on the divergence low is already set. The things are, key is divergence entry, overbought stochastics exit, unless you have the 5-minute rotation or you have a very strong trend. Or you're in the beginning of the market and a lot of good volume. You know, there's certain things that you could read as a trader. You're going to become more tuned into what the market is doing, and you'll be able to feel it out a little bit better. But just as a generic rule, you know how to get into a position. If you want a generic reason to get out, I would use the stochastic rotation, because 90% of the time you will see every time we get overbought, we push up and we push down. We push up, we push down. We push up, we push down. We push up. Why are you going to try to change anything? All right? So That's inspiring. That makes me like excited every night to know that every day I have to just work on my discipline. I have to work on my patience. The trades will be there. I know they will. Then we come back to the big situation. If this is so exciting, should we discuss it? Should you teach it? I don't know. I think, when I was coming back, I said, I got to use, what? Got to use the members only, thing better. I got to start shutting off the show to non-members. But then again, I'd like to promote the show and get people to be on in as a member. So how do you do that without sharing it, But I think tomorrow we're going probably more than half the day members only if these things start to show up. So let's go back here and think about the membership. I'm talking to members out there. They know the value of the show and the quality of the traders. We got great traders in the room. I'll point out one right now, Maximilian in the room. You see him trade every day. Pulls in probably over $10,000 a day trading. He's on a different league. Not everyone could trade like him. I'm teaching trading to the newer traders, but you adjust it to your style. Whatever you have, whatever you could do, you adjust it. This is it's hanging in there, actually. It's a positive trade on the tradometer. I mean, on the bot, Ram bot, the trade bot, the rock bot, the Sir Bot-a-lot, Sir Mix-a-bot, Ivan Botsky is moving up. So let's go back here and let's take a look at some of these. So we had this one, it moved in our direction. I could spot a divergence like smelling a fart in the closet. Here's a sell side divergence right here, right before the close. Called it out, right down. Turned into a buy side divergence right at the close. Right here. And then where did it move? Straight back up. Now I talked myself out of this because it was the end of the day, and I just, the end of the day sometimes gets volatile, but it ends up that these things end up working anyway. So let's go out further. Let's see what else we had today. So again, let's go back. Here we had a divergence, moved up. Here we had a bear flag. We had a divergence, moved up. We had a bear flag, moved down. Perfect HPS setups. All of them moved in the direction of the signal. End of the day, bear flag moved in the direction of the signal. I mean, the bearish divergence moved in the direction of the signal. Bullish divergence moved in the direction of the signal. I mean, this is what you're going to see all the time. Look at this divergence. Lower trend line divergence. Lower trend line divergence. That's a channel divergence. Higher low. Look at the move up. Boom. Way up. Turn into a bullish flag. Boom. Continuation. All these things. That's 4 setups right there. That's $400 in 2 contracts. All right? That's $400 you just made there. Maybe you started your account with a couple $1,000 at Ninja Trading. You're trading, 2 contracts. It cost you $1,000. You already made $400 there. Here you had something that looked like a divergence. Maybe was I calling this as a divergence? It hit it really wasn't. You can see it gets through that dotted line. I was saying that it kind of looks like one. I mean, we did have a little pullback here, but it wasn't a very strong rally. And again, that's another thing you're going to learn. Is learn when to trade. Over time you got to learn that you don't want to go against a bull market. This type of trade today was called a bulldozer trade. It bulldozed over the shorts most of the day. So we pulled back a little bit, but that wasn't really a divergence. We want to have a steep divergence. All right? Really want to have a steep divergence. There was nothing there. There was kind of something. No, there was nothing here on that higher. Is that a higher? No, that wasn't a divergence. I'm looking, and plus you're embedded up here too. So whenever you see that embedded stochastic and it sticks up here, you're very strong. And you go, and again, here, this was something that was a divergence. Right here. All right, so we did have a pop and then pull back a little and pop back up and pull back a little. I think we discussed this. This was what we called a running divergence. But we also said, hey, this market is very strong. Be careful. And then we said, take a look at that divergence. Take a look at that 60-period stochastic. What does this mean? We have a fast rotation. We have the price holding the 20 closing price holding the 20-period moving average. That is a bull flag. Yet it's such a strong setup that it doesn't really even flag out much. But the signal there was for to go long. It wasn't a pure flag, but it was a strong signal. It was a strong signal. And you feel that, you have to, that's what probably catches. That was probably the only one that would have caught you. But of all those other ones, there was a nice flag. I think you had 5, 6 good setups today. 5, 6 great setups. And that's what you want to do. You don't want to, yeah, you could say, well, I want to go long here and just hold on. And I was out at, I got, 20 points on it today. That's fine too, if you catch that. But that's not going to be every day. That's not going to be every day. And, maybe you get 20 points by trading the ups and downs too. There's 2 ways of looking at it. There's just 2 ways of looking at that. I don't think anybody's going to be riding that up as strong as unless you adapt your methodology and you use that trailing stop method. But you want to lock in the profits in the first place, and then follow it up with a trailing stop. So you have that initial move, you lock it in, and you move your price, you move your stop under or towards a break-even area, and then let it run. And then you're going to get more and more profits. We don't even consider that. That's what's great about it. If you take the standard 1-point trades on 4 of these last trades were easy trades for a point. Most of them gave you over a point, but we're just being very conservative in our estimates. And if you have multiple contracts and you just put a trailing stop, the sky's the limit. You probably double on what you already made. So, that motivates me to come in tomorrow and then not just look at the charts until I see that. It'll be a boring day when we just want to trade divergences. The show is going to disappear. I want to be in again, we want to have fun also. We love talking. I love hearing stories from RPM about his neighbor. There's certain things that we do to keep ourselves sane. We're all friends too. We met a lot of great people at the show this last weekend, or this past week. Yesterday, 2 days ago. It's a great profession we're in if we could master it. And it's not an easy thing to master because it takes mental fortitude. It takes so much discipline, so much patience. And most people don't have that. Or it gets developed. You need to go through that learning curve to realize you need to find yourself. You know how many people came to me at the booth today? They say, I used to trade with you guys a long time ago, and then I stopped. It wasn't good, but I'm coming back because I've been listening, and I'm coming back. Everyone has to do that sometimes. They have to try to find their own way, and then they realize, hey, the way he's describing it is probably the best way. I'm not going to try to find the holy grail. I'll find the closest thing to it and establish my discipline and patience. So, they all not to be kind of, but they all seem like they all come back. Because we're doing something good here. We recognize something in the market, and we're trying to adapt to it and try to be disciplined enough to, improve ourselves so we could take these, improve our confidence level, improve our patience, improve our discipline. All that works out in the end, and then you're able to pull the trigger. And the other thing I will leave you with is, and if I can bring it up here a second. Hold on. Hold on. I want to pause this for a second and bring it up. Oh, you know what I was doing? All right, hold on. So this was the other part that I discussed. I think I was able to touch on it for a second during the conference, but not too much. And again, after we talked about how important being disciplined and patient and taking only a couple different setups and knowing what setups to take and understand that the market's not going to always give you what you want, and you have to be able to you're going to have to be able to take off your profits when you can. You have all that for you. You have your stop. You have your entry signal. You have your profit area. So how do you progress here, and how do you get started? Well, I think there's another important thing you need to do is learn how to scale higher. You know, like you should be so organized and disciplined that you should have a roadmap of increasing your position each time you get to a new level. And this is a little calculator that I have on the site. Actually, it's actually for I actually have it on the site somewhere. I think it's in the forum. If it's not, it's definitely in the School of Stock, which is available for lifetime members. But I don't mind sharing it with you like this. Hey, Doug V. This is interesting because you get to a point where you're at a level and you're passionate about it. You see everything that's working. You see it because we go over it all the time. Now, how do we advance with it? Well, we start off at a certain level. I'm just saying, for instance. All right, hold on. Sneeze live on the mic. That's a big no-no, but I'm doing it. In this case, I've set this up for something that I was going to do with the Ninja Trader. I put in $5,000. I have $500 margin, and I wanted to do this for you guys on the bot channel. So this is something I was building. I was going to maintain. Now, normally there's a little difference between the stop we normally take, because our stop is set to the divergence low, one tick on the divergence low, versus taking a stop and taking a percentage, or putting in a percentage risk of your money per trade. Standard optimal risk 2 to 3% per trade. I don't know who came up with that rule. I don't even know if I agree with it. But we're going to use it. We're going to use it. But I'm going to use 3%. I actually should change this to 3%. I think I'm using fixed on here is 2%. So I'm going to use 3%, but it doesn't matter because you could actually just adjust. You could look at the adjustment. So say you have an account for $5,000. You're using a margin, $500 a contract. All right? And you want to trade a position. How many contracts should I take? Well, with a $500 margin, I mean, you can go balls to the wall. You know? You get 10 contracts. I don't know what the maintenance is and stuff. I'm not saying that you're going to get 10 contracts, but you do the math, you understand what I'm talking about. But you can get up there more than that what you're recommended to trade. So we're talking minimum 2 contracts. So I would say you start off with $5,000 account, $500 margin. You're dealing with a position size of 2. And with a position size of 2, that would give you a risk of 3% at a 1.5 point stop, basically, from your position. So a 3% control would be 1.5 points on the stop. Now, that doesn't sound like a lot, but actually the divergence could give you that. But this is just as a guideline. This is like a guideline. This is what I want you to understand, that you should have a method of increasing your position size as your account grows. Now, what a great feeling to have your account grow and doing something on a pace where you're saying, all right, now I'm up to these are all different margin types. So hold on. I should bring up the calculator and we could just do it. 5,000. All right, no, that's not it. Is that it? 5,000? No, I don't want that. Because the margin here on a lot of these other brokers are up over $1,000, possibly over $3,000 margin, like on the IB and stuff. Ridiculous. So when you're able to now get a $500 margin per contract, then you're talking about, you're talking that some realistic things for newer traders to be able to trade. So as this amount goes up, and I'm just showing you a screenshot of this. I don't have the calculator in front of me. Let me see if I can pull it up. I don't know if I have it available here. Yeah. What is that? Well, I put it together. I don't know if it's on this computer. Let me see. What would it be called? Position size. Oh, here it is. Course controller, divergence, position size. Maybe I have it. Maybe it's going to come up here. I might have it, actually. Oh, look at this. Check this out. So I do have it, and I bet you guys want it. Well, if you remember, you're going to get it. All right, so as your thing goes up, we could change this to 5,000. Hit the thing, and everything calculates, and we're back down to our 1.5% or 1.5 tick 3% rule. Now this is set up for stocks. Actually, this is 100 shares. I need to find the one for futures. E-mini position sizing. Let me see. Hold on. That's stocks. All right, I have it for stocks here. Hold on. We're going to change this to 5,000. Wait, hold on. Where is it? It's going to change everything up. So, and we're going to move our fixed maximum up to 3%. Oh, I should have put that. I should put the fixed at 3% also. Hope I'm not messing this thing up here. Anyway, all right. This is on, right? We're on the right screen and stuff. I want to make sure everyone hears me. I actually turned this off. I wasn't recording that last segment talking about all this, so I apologize to people. I just turned the recorder back on. But we were talking about now trading a $50,000 dollar account, and a 3% risk on that would enable us to take 20 contracts. Each tick would be $250 per tick, $1,000 per point. So this is how you should work your way up, in my opinion. And in my opinion, also, as a newer trader, and I talked about this a lot, a group of young guys, this Peruvian kid came all the way from Peru to see me. Not really see me, but I'm taking credit that he wanted to come up and see Day Trading Radio from Peru. I told him to say that. But, someone like that, I said, you need to establish discipline, and you have to work. You have to have a business plan. This is all part of a business plan. That's what's great about this. That's why I stress business plans so much, And your risk here, again, here's your risk. I didn't even take a look at the, let's take a look at the 50,000 just for the hell of it. So if you have that risk, you're trading with a 50,000, you only have 2 contracts. I mean, your risk goes out to all the way out here to like 8 points before you even get there, like 9 points. At this point, you're only talking 1.5 point risk. But you know, it's better to understand the whole process here. 3 points, 4 points, your risk is going to come. You know, it's going to adjust a little. So maybe with 10 contracts, you're talking about 10 contracts. You're talking about 3 points stop. That's going to give you a 3% risk with 10 contracts. That really opens things up for you. So you get where I'm going with this, right? You understand that there has to be a method to the madness, and there has to be just strict discipline. You have to make it your business to do this. This is a business that you're doing. Everything needs to define so you don't fall outside. You don't stray from the business plan. Once you start straying from the business plan, it's considered gambling, because the highest probability setups are the ones we define. We know we've been doing it for years and years and years, and you see it live. You just saw me point them out, and we just went by the last 5 of those setups, all worked out. So why not? Why doubt it? You know, there will be times when news comes out. There might be times when you see a bear flag, but we already know how to identify that. So, you know, game on. You know, game on this whole thing. The final thing you should do as a beginner trader.
Tradometer YM over.
I want to just take this and I want to send it up to Chicago, and I want to tell them put it on. Put a picture of me up on the board, because this is a great webinar right now. It's already lasted 36 minutes. I think we talked about other stuff too, but the last thing you should do is you start off with a sim account. Apply the rules. Apply this rule. Start off with $5,000. Apply everything we just talked about. Everything from your entry criteria to your exit criteria, using the 20-period rotation, using a 3% risk, and double that account. And when you double that account, then fund a real account with $5,000 and just do it again. All right? You already know how to do it. Do it again. You'll be super confident. And I know you don't want to wait for that, but you know, some people can. You know, some people will have that discipline to do that. People want to say, well, I wanted to start right now, but screw this. I'll practice while I'm playing, you know. Time for a Coke. That's right. Holy crap. Let me get some ice. Let me get some ice. Oh. I ordered a lot of sushi tonight too, because you know, I had that bad roast beef sandwich. I feel bad because I like going to that deli. The guy cooks his roast beef, but I think I caught the end of it. You know, it was all brown and it didn't smell good. And I took one bite, and I got a stomach ache, and I stopped, and that saved me. That saved me, because it eventually went away. The cramping went away. I knew it was the food. I threw the food away. And I only took 2 bites out of it. I saved myself. I feel great now. DTR poster. I like that, Villager. I like that. All right. So I think that's it for the video. Let me stop the video. If you guys are listening out there on YouTube, I hope you learned something. The video out there, I'll probably send it out, let you guys hear it. But again, most of the stuff is going to be for members going forward. So become a member of Day Trading Radio, and you know, follow our business. You know, make your own business, but be part of the team. Make some money, live the dream. All right, I'm signing out. DayTraderRockStar signing off of this video. But members out there listening, I'm still with you.